Risk aversion dominated the markets due to Obama's re-election as U.S. President, with the Dow Jones suffering the biggest decline in a year and dropping 312.95 points overnight, to close below the 13,000 psychological level at 12,932.73. Asian stocks followed, with the Nikkei down nearly 150 points and the Hong Kong HSI down over 300 points overnight. Crude oil is back, pressing the 85 level after jumping to above 89 earlier this week. Though, gold is supported by the expectation of continuation of the Fed's quantitative easing program and staying firm above 1700 so far. The dollar and yen maintained a firm tone against other major currencies, but the strength in both currencies is far from being overwhelming. The euro stays weak even though the Greek parliament approved the austerity measures that are crucial to unlock the next tranche of bailout funds. The New Zealand dollar was the biggest mover overnight after poor employment data. Focus will be on the Bank of England and European Central Bank's announcements later today. The so-called fiscal cliff is being mostly cited as the reason for driving the markets down. After Obama's win in the presidential election, market focus quickly turned to the fiscal cliff and the lingering political gridlock, with the lower house being controlled by Republicans and the Senate by the Democrats. In order to deal with fiscal issues, President Obama would probably announce his intention to bring back the Simpson-Bowles proposal, which includes annual discretionary spending cuts of $200 billion, an increase in tax revenues of $100 billion, and a reduction in entitlements and some changes to Social Security. In December 2010, the proposal was stalled as it failed to vote with 11 of 18 votes in favor, with a supermajority of 14 votes needed. Former vice presidential candidate Paul Ryan voted against Simpson-Bowles at that time, and he will continue to chair the House Budget Committee. Therefore, his comments regarding the issue in coming days might give some hints on his preference. If the proposal could be adopted, the Congress would probably delay the fiscal cliff and avoid letting the economy fall into recession. In Greece, the parliament approved the new austerity program with 153 votes in favor over a total of 300 seats. Prime Minister Samaras said in a statement that Greece today took a great, decisive and positive step. He emphasized that this vote was a condition that will create jobs for our children, for all of Greece to see better days. The bill approved included raising retirement age from 65 to 67 as well as cutting wages and pensions for the second time this year. The approval is an important step to securing the €31 billion tranche of bailout funds from the EU, ECB and IMF. The focus will now turn to the vote on the 2013 budget on Sunday, which is another step to get approvals for the bailout fund from EU finance ministers as they meet next week. We expect the European Central Bank to leave the main refinancing rate unchanged today. It would also be likely to keep the non-standard measures unaltered. While the economic outlook remains uncertain with risks skewing to the downside, the central bank would likely stand on the sideline this time as deflationary risks appeared contained, giving policymakers some relief. The Bank of England will also likely make no change in its monetary policy at today's meeting as the latest GDP report showed some growth. Yet, Governor Mervyn King stated last month that those more positive signs fade, the MPC does stand ready to inject more money. New Zealand employment unexpectedly dropped 0.4% quarter-on-quarter in Q3, dropping for the second straight quarter and pushing unemployment rate to a 13-year high of 7.3%. The Kiwi tumbled as markets are raising the bets on rate cuts by the Reserve Bank of New Zealand. Chance of a 25 base points cut in December as implied by interest rate swaps rose to above 20%, compared to 12% yesterday. Though, it's noted by some economists that there should be enough evidence for the Reserve Bank to cut by the end of the year, and the central bank could possibly wait for another quarter of weak data before acting. Elsewhere, Australian employment rose by 10,700 in October, much better than expectation of 500, while the unemployment rate was unchanged at 5.4%. Japan machine orders dropped 4.3% month-on-month in September, and eco-watcher current sentiment dropped to 39 in October. Swiss unemployment rate and Germany trade balance will be released in the European session, but the main focus is on the ECB and Bank of England's rate decisions. Canadian trade balance, new housing price index, and US trade balance and jobless claims will be featured later in the day.